According to supply managers in the 9 Mid-America states, how is the economy performing?
Our March survey of supply managers in 9 states, in Mid-American states, stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, was a surprising jump. It jumped to 71.3, and that's the highest reading since July of 2021, and it was up from last month's reading, that's February's reading of 64.0. So this was almost, I won't call it a shocker, but I was surprised it was so strong. Of course, these indices range between 0 and 100, with above 50, 50s being growth neutral. We asked about the economic challenges for 2022, and 7 out of 10 of the supply managers said that supply chain disruptions were the biggest issue facing their companies for the year. 2 out of 10 named higher inflation with accompanying higher interest rates as the biggest threat for 2022, and 1 out of 10 reported that labor shortages was the biggest issue for them. And here I'll bring up a chart that shows in blue, beautiful Creighton blue there, the profiles over the last 18 months, compares the U.S. to the Mid-American region. As you can tell, it's much stronger for the Mid-American region than the U.S. And I can attribute that to much higher agricultural commodity prices and the spillover into the other industries across the region. That's why I think we're seeing a much better reading for the Mid-American region.
What were the hiring trends?
Hiring was good and strong as well for March. The overall reading was 60.6, and that's well up from February's reading of 56.6, again, both above growth neutral. On average, we asked the supply managers how much of a raise they expect this year, and only 2.2% was the average. Now that's much weaker than I would have expected, and we asked, that's even weaker when we asked the same question, the returns from the same question about 3 or 4 months ago. Overall, the employment for the region is down about 1.8% from pre-COVID levels. So we're not back to pre-COVID levels in terms of employment. The U.S. Employment, non-farm employment I'm talking about, is about 1.4% down from pre-COVID levels. So the region is down to 1.8% non-farm employment down from pre-COVID levels. The nation is down 1.4% from pre-COVID levels. Arkansas is the only state in the region that's back to above pre-COVID level employments. All the other 8 states are still below pre-COVID-19 levels.
What inflation trends are you noticing?
Inflation was not good at all, meaning it was very high. The reading for March was 95.5, and that's up from February's 80.5. This is of course at the wholesale level. This is much, much too strong. This is going to spill over into the overall economy. We're going to see much higher prices for the rest of 2022, in my judgment. 2/3 of the supply managers reported delivery delays, so that's causing some of the price increases because of these delivery delays. Imports and exports, they were up for March. Pretty good numbers there as well.
What is the economic outlook?
Inflation will remain very high. Of course, we've now recorded this very strong inflation number for March, so this is going to remain with us for some time. The consumer price index will be higher in the weeks and months ahead. Economic growth will slow and potentially move into negative territory. We saw an inverted yield this past month, meaning short-term rates got higher than long-term rates. Supply chain disruptions will remain part of the scene, and they will lengthen somewhat because of Russia's invasion in the Ukraine. We're going to see short-term interest rates rise by at least another 0.75% by the end of the year. I expect it actually to be about 1.25% higher than they are right now. That'll push up rates this year alone by 1.5%, about that. So that'll push up prime interest rates by that same percentage, 1.5 percentage points. Long-term rates will rise by about another 0.75% in the weeks and months ahead. Supply chain bottlenecks, as I said, will remain issues. The biggest issue will be those supply chain bottlenecks, labor shortages, and inflation, which will push up interest rates. All those will be the challenges. I expect a 50 basis point increase. 50, that's a half a percentage point at the next meeting of the Federal Reserve, Open Market Committee of the Federal Reserve that sets interest rates on May the 3rd and 4th. So look out, there'll be a half a percentage point increase at that meeting. And what you need to keep an eye on out there, all of you, I would encourage you to keep an eye on the bond yield on the 10-year Treasury. It's now up to 2.4%, reflecting higher inflation. That'll move higher. Keep an eye on that. Employment report this Friday. That will be an important report to watch. That will be the employment report for the month of March. Make sure that number, if that number drops below 100,000, which I believe it will, that could be problematic, an indicator the economy is really slowing down. Keep an eye on the price of a barrel of oil. It broke below $100 a barrel recently. If it moves up, and I do expect it to continue to move upward, maybe if it got as high as $150 a barrel, that would be a big issue in terms of inflation, and that would slow the economy down. Also, listen carefully to what the governors of the Federal Reserve say. In other words, the next meeting is May the 3rd and 4th. Before that, they're going to telegraph to us what they're going to do on the 3rd and 4th. So keep an eye, listen out for that, for what the Federal Reserve governors say and the presidents of the Federal Reserve banks. Until we meet again on the first business day of May, may your economic cup runneth over, and thank you.